So, are you ready to dive into the financial world of Disney? Let's delve into the numbers. With their fourth quarter earnings poised for release this Wednesday, we see some fascinating trends. The projected earnings per share, or EPS, is an astounding 744.2% year-over-year. However, keep in mind there's been a dip of about 30.7%, sliding from 1.03 per share to 0.71. The anticipated revenue also presents an interesting scenario, standing at 6.2% year-over-year, but has decreased by nearly 10% from $23.7 billion to $21.4 billion. Reflecting on the previous quarter, Disney surpassed EPS expectations but fell a tad short on revenue. Looking ahead, they forecast a heightened EPS and revenue on a year-over-year basis. Now that we understand the financial overview, let's explore the growth drivers of Disney. Disney's growth rests on three pillars. The first is Disney Entertainment Studios. This sector is seeing a resurgence with a keen focus on improved film quality and cost-effectiveness. They're capitalizing on multiple content distribution channels and banking on successes like Avatar: The Way of Water. Major franchises are being leveraged to generate excitement and highlight the symbiotic relationship between film studios and Disney's parks and resorts. The second pillar is the Parks and Experience segment. This arm of Disney is blooming, with international venues such as Shanghai Disney Resort and Hong Kong Disneyland showing remarkable performance, despite some hiccups in the Florida markets. The third and final pillar is the direct-to-consumer business. Disney's strategic shift towards streaming is turning heads. They're zeroing in on profitability with a one-app experience, expanding their direct-to-consumer ambitions to ESPN, and an exclusive deal with Penn Entertainment for sports betting. Despite the growth, Disney faces some challenges. Let's take a look at those. Every success story encounters hurdles. Disney's no exception. The entertainment titan grapples with a few significant challenges. A notable one is the cord-cutting trend, a shift towards streaming platforms, which has created a whirlwind in the traditional cable and broadcast sectors. This trend has affected both domestic and international channels, causing a decline in operating income. But Disney is not a company to shy away from challenges. They've shown a steadfast commitment to delivering quality content, regardless of the platform. They are determined to navigate this cord-cutting wave by investing heavily in their own streaming services, such as Disney Plus and ESPN Plus. In a similar vein, Disney has had to contend with strikes and disputes in their creative communities, but they remain committed to resolving these issues, ensuring fruitful collaborations with their creative partners, and contributing to a harmonious and productive working environment. With a clear understanding of the challenges and commitments, let's delve into the financials. Disney's financials speak volumes about its robust foundation. The third quarter showcased diluted earnings per share, while an upcoming presentation is set to shed light on the recasting of financials in new segments. There's been a significant improvement in direct-to-consumer operating results, with Disney Plus showing promising subscriber growth. Core Disney Plus average revenue per user results have been favorable, while Hulu and ESPN Plus are not far behind, fueling hopes of direct-to-consumer profitability by fiscal 2024. In the sphere of content sales and linear business, there's an ongoing dialogue about the decline in operating income. The cord-cutting trend remains a challenge, impacting both domestic and international channels. As for parks, experiences, and products, international parks, particularly Shanghai Disney, are performing exceptionally well, and the upcoming fourth quarter holds much promise. On capital allocation and cash flow, the emphasis is on prioritizing long-term growth. The strong balance sheet and credit ratings reflect the company's financial health. With Bob Iger's commitment, Disney remains dedicated to its shareholders, promising a bright future. For more information, the description is below to join a community of like-minded traders.
Arieous Invest. Trading reimagined.